Good morning everyone, this is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 19th of July. Overnight, the minutes of the latest RBA policy meeting, when interest rates were left unchanged, showed once again the bank's strong data independency. Specifically, the board noted that further information on inflationary pressures, the labour market and housing market activity would be available over the following month. Alongside the updated staff forecasts, which will be available to policymakers prior to the August meeting, this would allow the board to refine its assessment on the outlook for growth and inflation, and to make any adjustment to the stance of policy that may be appropriate. As a result, the inflation data coming out end of July are likely to be even more important than usual, as they could be the catalyst for the bank to decide on whether it should cut rates or hold its fire at the next meeting. The Australian dollar weakened on the news and could stay under selling interest, especially if the nation's incoming data are disappointing. As for today, the IMF publishes its updates on the world economic outlook, including the UK growth forecasts. We believe that following the UK referendum result, the fund will cut its forecasts for the UK growth. The impact of the Brexit vote may trigger a wave of downgrades for the rest of Europe as well. Indeed, the fund warned last week that the decision would also hurt growth across Europe. IMF's Managing Director Christine Lagarde recently warned that the fund was also possible to downgrade world's growth for the third time in 2016 as global uncertainty mounts. As for the rest of the events, during the European Day we get the ZW survey for July. Both the current conditions and expectation indices are forecast to have declined, with the expectations print estimated to have fallen significantly. We believe that the outcome of the UK referendum is likely to have weighed on the sentiment of German analysts and economists, as the future of the EU-UK trading partnership remains uncertain. This could bring the common currency under renewed selling interest. In the UK, the CPI for June is due out. Headline inflation is expected to have accelerated to 0.4% from 0.3% in May, while the core rate is forecast to have risen to 1.3% from 1.2% previously. Anyhow, given that these data were largely collected prior to the Brexit referendum, we expect them to attract less attention than usual, unless we have large deviations from the estimates. In case the forecasts are met, we believe that the reaction in the pound is likely to be short-lived. Overall, we believe that investors are likely to wait for July's data in order to gauge the performance of the UK economy in the post-referendum era, even though the Bank of England warned that those data will probably carry referendum distortions as well. From the US, we get housing starts and building permits both for June. Housing starts are expected to have rebounded from the previous month, while building permits are forecast to have slowed. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.